Welcome to the Cincinnati Real Estate Investing Show. I'm your host, Slocum Reed, joined by our co-host, Ian Cruz, and today's guest, Jerry Garrison. If you are here in Cincinnati and you've done anything with real estate or real estate investing at any point in the last couple decades, you have crossed paths with Jerry, one of the most well-respected, but also well-liked realtors that there is. He has his own investing journey of multiple decades. He has particularly profound insights into some of the neighborhoods where he's been investing in quite some time. And we've seen a lot of change over the last 10, 15 years here in Cincinnati. Jerry, give us a little bit more of your background in real estate and what you're doing currently.
Absolutely. Thanks for inviting me on. And I was a corporate guy 25, 30 years ago and didn't necessarily work well with others. I started managing property. And when I started managing property, I didn't even know where most of the streets were because I wasn't native to Cincinnati. But everybody thought I was the pro. Okay, I'm the pro. And I was able to start selling multifamily real estate. And not a lot of people were doing it then. And when I started that, when I'm managing property, I did that for a number of years. I realized that you're not necessarily going to get rich if you're managing property for other people and you're not investing yourself. I went heavy into real estate sales and had some ups and downs with the larger apartment communities. And I have settled in where I'm a single family investor and I own quite a bit in Madisonville and reaching out into Newport. And I also do 2 or 3 flips a year. It all comes down to margins. If I find a property that the margin's right, that's my green light and I go.
Couple of timelines here, Jerry. When did you get into real estate? And when did you decide to transition from multifamily to single family?
I got into real estate, I'm dating myself huge here, but it was about 2005 and was a newer agent getting after it and had a client that said, look, you find them, I'll finance them, you run the rehabs. Didn't really have the experience to run the rehabs, but I said, I can do that. And we jumped right in. We had a great partnership and things were terrific. And we were undercapitalized and bought too much. If you notice the timeline, about 2008, things started getting a little challenging. And about 2012, my business partner decided to get a divorce and quit funding the property. We had the man, he came up and said, Jerry, I'm not funding this anymore. And I said, you're a salaried individual. I'm a commission guy and you're walking away from the property. She said, yep, I want to tell you in person. I said, I appreciate that. And I became a very good salesperson because I had to sell 100 units quickly and a recession. And I didn't declare bankruptcy. My credit score got low and made it through by the skin of my teeth. And it is one thing I learned through that process was keep your word, know who you're dealing with. And a couple of people cut me some slack that gave me another day. And it was one of those things that doesn't kill you, only makes you stronger. From that, I got out whole. It was a challenge, but next steps were, I was very risk tolerant. I went about 5 years. I was very risk adverse. And then I started slowly investing back in real estate. And
is that when you transitioned to single family as well, coming out of the Great Recession?
There was nothing really like Bigger Pockets or really everybody covered their homework sense and there wasn't that many investors out there if there were, they were very quiet about it. So you didn't have the resources to really learn the trade. And if I was smart, I would have hired a property manager and just focused on individual property renovations. I would have made sure I was capitalized and had the access to money. Didn't know there was probably some better options I could have taken if I was a bit more knowledgeable, but nonetheless, I did not turn it over to management. And I saw a lot of smaller apartment buildings at the time, and people thought I was cherry picking, and they were probably right. So I kept with selling the smaller apartment buildings, and I didn't really have competition for single family homes initially. Started finding ones I could buy, fix up, and flip, and then said I kind of want to retire someday, so I started completing buy and holds, and that's worked out well. The book that really changed the way I directed my investment really was Keller Williams Millionaire Real Estate Investor. Love it. All of a sudden I noticed I'd read the book 3 or 4 times, taught some classes on it, and then suddenly realized I'm managing properties exactly like the book says. I locate properties like that. There's different ways to skin a cat, but you have to have a methodology.
Jerry and I are both Keller Williams agents, and that millionaire real estate investor really is a good 30,000, but also 3,000 foot view of everything available within real estate investing. And especially for people who are already building expertise as agents in their market and learning how to think like their clients who are making really good money off of deals that the agents are just identifying for them and helping them acquire. One more thing here. I also get frustrated with clients accusing me of cherry picking because I'm an investor as well. I always tell investor clients as an agent that I want to know their numbers. I want to know what returns they're looking for. Then I'm going to go find the deals. If they exist, I'm going to go find the deals that meet their returns. What I'm looking for myself is practically irrelevant. The investors who are worried about their agent cherry picking are investing with more FOMO than data or goals. They really should be figuring out what works for me. And then when their agent brings them deals, does it work for them? If so, buy it. If not, don't. And we have the motivation as agents of the commission to make sure that we're getting good deals in front of our clients. Jerry, I've known you for a few years. I know that you ended up settling on a particular neighborhood for a lot of your buy and hold investing. Can you tell us a little bit about how you decided to focus on one part of town and why you did that at that time?
Even when I had one of the things I noticed when I had the multifamily properties, they were somewhat scatter site. So it was tough to go from, I'm trying to think, go from Clifton all the way over to different neighborhoods. So I was always in my car. If you're following up on 2 or 3 different things, it just wasn't efficient. And specifically since at that time I was self-managing. What I wanted was just a central base. So I figured if I could come up with 5 to 10 houses, I could do things much more efficiently. And I did. It was also easy. It's also to attract additional opportunities if you're always in the same neighborhood. I was in Fairfax and I did 2 renovation flips there. And, I literally was wrapping up one and next door neighbor put a for sale sign out in the yard. And I walked over, talked to her, and bought another house. I would not have had that opportunity if I wasn't constantly in that neighborhood. And I could repeat that story in different scenarios.
Jerry, tell us a little bit about Fairfax. That's a neighborhood that especially people not from Cincinnati probably haven't heard of.
It's the strength in Fairfax. It was very investor heavy. In fact, 10, 15 years ago, it was primarily investor. And what was unusual, it is west of Mariemont. It's even closer to Mariemont's 10 or 15 minutes from downtown, and Fairfax is even a few minutes closer. Back in the day, I would say zoning was optional in Fairfax. I've run into a few things that were creative that you had to undo or work around. However, because of the Mariemont School District, the value has just gone up the charts. And the lots are selling for 120 to 150 now. Great
Empty lots.
Yes.
Small ones too.
Oh, absolutely.
I had a client who I helped him buy the first one. He and his partners specialized for a while in popping the top off of those ranch 2-bed, 1-bath homes. They would find the ones where their architect would give them permission to remove the roof and add a second story and turn that 2-1 into a 4-2.5, because the demand, given the Mariemont schools, even though it's in Fairfax, was so great that they could pay retail at the time a few years ago, several pre-COVID, they could pay retail for the 2-bed, 1-bath house that's in that Fairfax vintage of homes and just remove the roof, build a second story, redo all of the mechanicals, and end up with a significant profit just because of how much appreciation they forced, moving a 2-1 into a 4-2.5 by doubling the square footage.
Very common. And what's interesting with that is there was a stigma. My kids went to school in the Mariemont School District, and there's a stigma if you lived in the facts, and now it's gentrified. So now it's the Mariemont School District. And there are still opportunities in Fairfax, but they're becoming fewer and fewer. It's really tough to find a property with a margin that makes it a good investment or a good resale opportunity.
To our listeners who are just learning Cincinnati through this podcast, I'm sure that they can pick up on the fact that Mariemont is a good school district.
Taking a quick pause for the Cincinnati Market Pulse update by Ian Cruz.
Welcome to the Queen City Pulse, your quick hit on what's happening in Cincinnati real estate and the city overall. First, FC Cincinnati just dropped details on a massive expansion of TQL Stadium. We're talking added seating, premium amenities, and a 332 mixed-use development breaking ground this summer right next to the stadium. 2 14-story towers with a hotel, market-rate apartments, ground floor retail, food and beverage, and team offices. The total project cost is estimated at $545 million, and the club has applied for $136 million in state grant funding. This matters for investors because the West End corridor is being permanently transformed. Mixed use of that scale anchored by a sports venue is a long-term neighborhood demand driver. Next up, there's neighborhood revitalization in Northside. Dean's Mediterranean, a Finlay Market staple since 1985, has just opened a new outpost on Hamilton Avenue. What's notable is that this is the first retail investment in Northside's business district in the Community Development Corporation's 25-year history. When beloved local businesses start planting flags in emerging neighborhoods, residential demand follows. Also, downtown, a California couple is opening Brood on Court Street, a combined coffee shop and craft beer bar in 3CDC Court Street's condos project. They said they specifically researched what Cincinnati's third places are missing and built the concept around that. Court Street is becoming one of the most activated corridors downtown, and that street-level activation is exactly what makes urban neighborhoods more livable and leasable. Finally, the building housing Clifton Market on Ludlow Avenue is facing a foreclosure lawsuit, with owners alleged to have defaulted on about $2 million in commercial loans. A lot has been made of Clifton Market. Whether or not they be coming back in recent times, this is the latest update on what has happened with that market. That's your Queen City Pulse. Now let's get into the show. Do you want to share just geographically where it is? You have Mariemont, you have Fairfax. Are there other pockets nearby that are also have the same kind of impact of just being near the Mariemont School District?
Yeah, it's really interesting. Mariemont is actually bordered by Madison Place and Madisonville, Columbia Township. And I'd lived in Mariemont for 20 years, and there was almost like a border that a home on Mariemont at the time would be worth $350,000 a home, and that Madison Place was anywhere from 80 to 120. And why I didn't buy every one of those I could every chance I got, I don't know. But and now Madison Place, Madisonville, same proximity to downtown as Fairfax are very popular. Madisonville, you still have to monitor the street. And when I say monitor the street, just see what's going on street and turn value. It's absolutely a safe area. And the housing stock is absolutely terrific to work on. You don't run into too many structural problems. The homes were well built, so they're generally a pretty straightforward renovation.
The ones that are still there, at least. They were going to have problems. They had those problems 80, 90 years ago.
Good point. Let's see. So that's Matt. Let's see. I'm trying to
Jerry,
think what others.
Yeah. Tell us a little bit more about your experience in Madisonville. You've been a landlord there for quite a while, long enough that you've seen the major redevelopment within the neighborhood while you've owned rental property there.
Absolutely. It was interesting. I think the first home I purchased on Britain for $105,000, which at the time was not, I would say, going rate, maybe a little bit below market. That was probably 2017. And I was hopeful to get $1,000 a month rent on it. So I put it out at $1,200, advertised through Zillow, and I literally had 20 people show up.
What year was this?
I want to say 2017. 2017. And I'm not the smartest guy in the room, but I said, okay, I can do this again. And that's what I did. And that's one of the things, working out of the real estate office, I told several agents in our office, look, you see anything in Madisonville below $100,000, I'm your guy. And I would let them get both sides of the commission. And I picked up, 3 or 4 properties that way. And what I saw was there was some resistance, really, even though 8, 9 years ago, I saw some resistance. People didn't think that neighborhood would recover to the extent that it would. There's some agents who really worked it, brought some additional investors in, and then all of a sudden the investors started, prices went up a little bit. The housing market was tight. So some of the investors started selling their rentals and they started pushing the price. And the prices jumped significantly. I've seen probably a 60% increase in value on some of my homes.
Madisonville is also, go ahead.
So the rents have gone up from $1,200 to $2,000 and higher.
Madisonville is also one of the neighborhoods in Cincinnati where, one of the main roads through the neighborhood or multiple main roads to the neighborhood, the mom and pop retail commercial, like the auto body guy and the ice cream parlor. The ice cream parlor is still there, but a lot of those got knocked down by a developer who came in and put in 3-4 story mixed use where you have the most in demand among young professionals, retail spaces and retail tenants on the first floor. And you've created Class A luxury apartment living on floors 2, 3, 4, 5. And so that is Madison Road in Madisonville, right? Yeah. I don't remember how many years ago that in particular was built. Jerry, let's shift to talking 2026.
Okay.
Madisonville. For a real estate investor, what kind of play is working if they're looking to buy in Madisonville in 2026?
I think the play really is value add. If you can locate a property that you can improve, you can significantly enhance the value, where it's a great opportunity to fix and flip, resell. There's some great resale opportunities there. The margins for me as an investor are continue to get tight. Now, part of that is values of the prices have gone up. Now rents have gone up reciprocally, but I'm also looking at 6% interest, not 3 or 4% interest.
And everybody knows about Madisonville is hot now. And so you're not able to buy with as much of a discount anymore, are you?
Correct. It's very interesting is you have a lot of homeowners still in Madisonville who've been there for 30, 40 years, and the tax values are crushing them. It's sad, but it's a reality. So you do see some people relocating because property taxes have gone up and they've moved into apartments. So there are some people who need some relief in that. I really hope that some of the adjustments they were talking about making the property taxes benefit people who survived neighborhoods.
For sure.
Yeah. But that's where I'm seeing some of the opportunity. People just can't really maintain their house and pay property taxes.
I've got a couple questions here. First, I want to go back to Fairfax, Jerry, since we discussed it earlier.
Sure.
2026, what kind of strategies, business plans are working in Fairfax for someone who's buying right now?
I'm working with a builder over there. If he can locate a lot, ideally around 120, he's jumping on it and building homes that are, what's that?
What is he building?
Three bedroom, 2.5 bath. If the lot works, he'll do 4 sometime, but he's got a 3-bedroom, 2.5 bath with a finished lower level that seems to be quite good for him. And
are these like the row houses where you have the garage right next to the front door and your living space is on the second floor, or is he doing something more conventional? What do the parcels allow?
A different builder, but the ones I was referring to definitely where you want the driveway, you've got the garage and the front entry is to the left of the garage. The builder I'm speaking of is trying to get away from that if the lot will allow it. So if he can do a detached garage or offset the garage in any manner, he doesn't particularly look at that. But the lots are tight. I can't remember what the width of the lot is in Fairfax, but it's not particularly generous. So you're working with setback lines and the width of the lot.
That townhouse style is becoming so popular now, where the first floor, the front is the garage, and then you have your entrance, and then the back of the first floor is like a utility room, maybe laundry, maybe you have an office, or maybe a bedroom, ensuite bath. Your main living floor is the second floor, and it's as open concept as possible with a big kitchen and dining. The kitchen's in the middle and the dining and living areas are on either wing because this is a long, skinny building for a long, skinny parcel. And then your bedrooms are on the third and fourth floors. And then in the neighborhoods where you're looking at having a view of downtown from the top, you might have a rooftop deck or have balconies up on those upper floors. But I'm about to list one of those in Westchester. That townhouse style is popping up all over the place in these neighborhoods that were first developed 100+ years ago, when houses were just a lot closer together than they are now. The parcel is the same size that it was in 1904 or 1884. And so this is what people can build on it.
Right. And it checks all the boxes, what people are looking for, and it's easy to maintain. And where I think in the past, people wanted a bigger footprint for a yard. I don't think it's as significant of a demand as previous. People are busy. They don't want to spend their Saturdays cutting the grass and doing projects.
You were saying that margins have gotten tighter, especially in Madisonville. It's what I tell people is that you can't bigger pockets Cincinnati, and you can't Zillow Cincinnati either. The information is just so much more available now than it was back when all the investors were covering their homework, to use your phrase, Jerry. So where are you buying your house flips? What are the neighborhoods that are offering you the margins that you need to flip a house right now?
It's been tight. I went across the river to Newport. I think the property taxes are easier to work with. The inspectors are a little more challenging.
Yeah.
You know what? If you meet with the inspector right off the bat, you do what you say you're going to do, you build a rapport like anything else, and it goes smooth. I don't cut corners anyway, but in that particular instance, you've got somebody who's monitoring, make sure that you don't. So I'm leaning into Northern Kentucky. I still think there's opportunity in Madisonville. I think there's some opportunity in Evanston. I do think the footprint, different neighborhoods are expanding. And I think there is obviously a shortage of housing. And I think a lot of the neighborhoods that are gentrifying, whether it's East Walnut Hills or Evanston, you've got other opportunities. And the West Side is terrific. I'm looking at a property on the West Side tomorrow.
My guy was on the West Side looking at a property today. I hope it's not the same one. I'm sure it's not, but you and I know a lot of the same people. We better get an offer in today. You said Newport, notorious for having very strict inspectors. I've been hesitant to start buying and remodeling in Northern Kentucky because a lot of my contractors aren't licensed in Kentucky.
Yep.
And especially in Newport, you know that they are a hawk on every single branded vehicle that comes through that might be doing something in the trades in one of the houses in Newport. So are you using completely different contractors for the licensed permitted work in Kentucky than you use in Ohio, or are your guys licensed in both?
No, I ended up paying a little bit more than I'm used to paying because I had to use contractors I wasn't familiar with. However, once you get engaged in an area, you know who to talk to, that you understand the pricing a little bit better. But my initial rehab there was an expensive learning curve with who to use and how to move forward efficiently. And so I think I've got that down now, not 100%. It's also tough for me. I live in Old Milford, so I'm 15 minutes from Madisonville. If I go to Newport, it's 35 minutes. And so it's a little bit different than what I'm used to in terms of just my overall operation.
Now that you have more experience, how does the cost to flip a house in Northern Kentucky compare to on the Ohio side of the river? Is it just simply more expensive on one side or the other?
It's not, I don't necessarily think so. I can definitely renovate a house cheaper in Cincinnati just because I'm better connected there. But I think I know enough investors over there that once you establish your contacts, the cost is going to be similar. I do like the property taxes. I'm paying to whatever county that is, but you pay double taxes there, but it's still less than what you're paying in Hamilton County. And I'm familiarizing myself with Covington. There's good vibe there, and it's the cost of ownership, I believe, is a bit less expensive. And so I think there's some opportunity because of that.
Jerry, you mentioned you live in Old Milford. What's the difference between Old Milford and just Milford?
I guess I'm being I don't know. It's funny. I lived in Mariemont, a little further west, lived in Terrace Park. And then I stumbled across something in COVID and lived in Old Milford, which is right by the river. I think I want people to know I live next to the river because I like getting on the river and playing.
When I think of Milford as a real estate investor, I think mostly of I know that there are a lot of 1950s ranch home neighborhoods. Once you get outside of 275, you get into the 1990s to now subdivisions of all the 4, 2.5, maybe a fourth bathroom and a finished basement where little boxes on the hillside made it ticky tacky. You also have a lot of what would likely be called Class B multifamily in that space, especially out around 275. When they started building the larger apartment complexes, 100 plus units, things like that, Milford is similar to Eastgate and some other neighborhoods out that way in that regard. But that's not Old Milford. When I think of Old Milford, you're going to have to name the street for me, but I think about that little strip that had like a couple of bars and a pool hall and a coffee shop and a knick-knack shop. And it's all that classic turn of the 19th to 20th century Cincinnati 2-story retail apartment over where there's one apartment above every single one of these shops.
That's changing it. It's getting a little bougie. They opened up something called Little Miami Brewing, and that was and still is a big success. And that led to some more construction. So I'm a hole to wall kind of guy. There's not too many hole walls left in Old Milford, but it's very walkable and fun. And but you're right in terms of the housing close to there. You have some sporadic 4 families. You go a little bit further. In fact, I was at Lowe's today in Milford, and on the other side of Lowe's, a 24-unit building I sold a number of years ago, and I actually drove down there and said, "What's going on with this property?" And it was interesting because there was a little bit of space when I sold this property, and they somewhere along the line put in 4 new kind of a B or C class type apartments that are, I think, a little bit better than they were. But that's all on the other side of 275. And Milford is a big footprint. It's a huge area. So you've got you've got a huge demographic, economic scope in Milford. And there's a lot of opportunity because the school district is very popular.
My dive into the deep end of real estate sales was in the fall of 2015, and open houses for a house flipper who ended up flipping like 50 houses in that following year was the best opportunity for me. The only time that I ever sold a house to someone I met at the open house was on Potawatomi Trail in Milford.
Yeah.
Yeah.
The street name way.
Yeah. One of those 3-bedroom, 1 bathroom upstairs. And then the flipper had finished out half of the basement and put another bathroom down there. And the guy at the open house just said, "Okay, I'll take it. Tell me what I need to do." And so I signed him right then and there, and we got him the house.
Love it. I love the easy ones. Appreciate them.
Yeah, man. I between 2015 and 16 ended up selling like 3 million in and around Milford based on people I met at open house. And 3 million was a lot more in 2016 than it is now.
Oh my gosh.
But
Sure.
that was the only opportunity available to me. We have a last question that we always ask. It's a little outside of real estate. Ian, did you have anything you wanted to ask before we got into that?
No, not most.
All right. Jerry, Jerry, speak to our listeners who are considering getting into real estate investing starting now, 2026, Greater Cincinnati. What advice do you have for them?
I have a strategy. Determine what a margin is. If you don't know what a margin is, it's, how much you're going to make after a year, after your expenses are paid and mortgage is paid. And then I really do recommend targeting a particular area. One, it simplifies your life, specifically early stages going into investing prior to hiring a property manager. And you also get to know an area, and you get to know at least as you become the expert of the area. And that's huge. And then rinse and repeat, do the same thing in another area. The hardest purchase really is the first purchase. And it doesn't have to be a home run. You just want to get through it and learn from it, and then decide whether or not you like it, and then can move on to the next one. Buy right, you got a back door. Don't like, you said real estate investing is not for me, you should be able to get out of it whole and put your money in the stock market, which I don't necessarily recommend. And I think you have to have a passion for it. I really enjoy it. I've been doing this for a long time. I could walk away from it, but I like it. I like representing buyers and sellers, but I like renovating. I enjoy working with contractors. I've got guys I've been working with for 10 plus years, and it's fun to see them, and it's fun to build something and provide good housing for good people. Understand how to handle money. I will tell you that after the third or fourth one, I said, is this worth it? And then I did the fifth one. I said, oh, okay, it's worth it. And then you learn I didn't understand. I missed some opportunities along the way that I understood hard money, or I knew how to pull money from clients, investors who would gladly invest in me. I didn't know how to ask the right questions. So that's another learning stage. And like I said, I didn't have the opportunity initially to have forums like this or other forums. So you learn from being around people who invest, and there's a lot of successful investors in Cincinnati. Learn from them. Everybody, no one covers their homework. Everybody will talk you to death. And so it's fun. I enjoy it.
Jerry, last question we ask everyone, and you can answer this outside of the realm of real estate if you want. What are some of your favorite hidden gems in Cincinnati that people who don't live here and a lot of the people who do live here don't know about?
I mentioned the Little Miami River. You have a national scenic riverway that's right there. And if you hit it during the week, not the weekends, you're going to see an eagle fly overhead. You're going to just, nothing else. It's going to be quiet and enjoyable. I just love the simplicity of Cincinnati, that if you want to go to a ball game, you can get there in 30 minutes. It's easy to park. It's very walkable. It's very safe. But downtown is the kick, man. You can go down there, go to a soccer game. You have nothing to worry about. It's just, where you're going to get your next beer and have a good time. I'm a big advocate for the city. And I think that good times aren't going to necessarily hit you in the head, but if you go looking for them, they're there. So
there was a kid in my daughter's class when she was in kindergarten that had just moved here before that school year from Warsaw, Poland.
Wow.
And I got talking to the parents at a birthday party, and they were amazed and impressed by Cincinnati. They called Cincinnati a green city. You have parks everywhere. So many different parks, so many different places with trails, scenic riverways, the Loveland Bike Trail. They really enjoy Cincinnati for the opportunities to be in or close to nature. Of course, coming from Warsaw, I can see where they're coming from. Yeah, that makes a lot of sense. Jerry, we appreciate you being here. Thank you. Listeners, we appreciate you all being here as well. Please do subscribe to our show and leave us a 5-star review, and share this episode with a friend that we can add value to through our conversation with Jerry about the breadth and depth of his experience, the neighborhoods we talked about, Fairfax, Madisonville, Newport, how to understand and find your margins. We hope you have gained value from this episode, and we will see you next week.
Thank you.
Thanks for joining us, Jerry.
Absolutely.